Welcome back to Canadian Mortgage Weekly. Today, we're going to talk about a client I had that gave me a call to get a mortgage. And let me tell you a little bit about what happened. The client was really excited. They were referred to me by someone else that has used my services in the past. So thank you very much for that referral. But essentially, they wanted to get into the market and start looking at homes right away. So the real estate agent told the client to get a pre-approval right away, and obviously that's the right thing to do. So that client then came to me for a pre-approval. We looked at their credit, and their income, and everything was looking good on the income, right? They both work full-time positions. They both make good money, and they both could qualify actually for something very reasonable, very reasonable. As a matter of fact, I believe they qualify for an average price home in Canada. So it's a couple, and they both have full-time positions, and they have a down payment ready to go, the minimum down payment. However, something happened when I looked at the credit profile, and we found that the client actually had a credit card, and the credit card actually ended up getting closed, and now there was no credit history for that client. So that ended up being a little bit of a concern because without any credit history, this client's score, actually a score that was very good in the past, had actually dropped below the minimum required score that is needed for a mortgage. So what happened in this case? Well, there was an interesting scenario where the client could actually afford the mortgage, afford the home they want to get in, but can't actually get into that home because of the fact that they don't have the credit to show the lenders and the banks to be able to hold this mortgage. So I've seen this happen in the past. And it's something that it's really unfortunate because the clients here, they definitely can't afford the home. They just don't have the credit to do that. And it's not that they didn't have good credit in the past, it's that there was no credit currently. So the borrower thought that they were doing something right by not having a credit card, obviously, and to just pay everything cash. But because of that, all the good credit history was now old, and all the recent credit history was not available, and the score was dropping as a result. So even though these clients were waiting for the market this year, 2024, and the market this year is looking really good, and I'll get into that in a few moments here. But even though these clients were looking forward to this and they were ready to go, they can't now move forward because of that. They could move forward though if they wanted to take a mortgage with 20% down. Obviously, if you have 20% down, having no credit showing on your credit file doesn't really matter as much because there are other lenders that use alternative methods of credit to verify your mortgage approval. And in that case, can get a mortgage approval for those clients, but they didn't have 20% down in this case. They only had the minimum down payment. So I presented the option to them if they wanted to get a house today, because they canceled their credit card and closed the account and had no credit, they actually couldn't buy with the minimum down payment, even though they pay cash for everything now, but could buy for 20% down. So they couldn't proceed now, and now can't move forward on buying their home because of the credit score not being there. And that's simply to do because that credit card was closed and no longer reporting good credit to the credit bureau. How unfortunate. How unfortunate. And now what these clients of mine need to do, and I do this all the time with my clients. I do this all the time where I see a client that has either no credit or maybe bad credit, for example. They actually come to me and I help them rebuild their credit so they can get into a mortgage with the best rates. Or say you're a client that has a really high rate with a bank and you want to get into a lower rate mortgage product, then in that case, I help those clients too. It's good that they can get into a mortgage with 20% down, but now they have to open up a credit card, have that credit card working for them for a few months now, handful of months, 3 to 4 months before they can apply again to be able to show the credit file that they can have a mortgage. And the challenge now will be when we get to that point 3 4 months from now, after they open up that credit card, will they have good credit? How will they have used the credit card properly? And if they haven't used the credit card, then that may prolong things further. But they just have to wait now 3 to 4 months. And it's really unfortunate for these clients of mine because they're really excited to get into the market. Their realtor was ready to go and they can't move forward now because of this scenario. And it is unfortunate because they had worked really hard to save. They had worked really hard not to use credit, and they had worked really hard to pay for everything in cash. So the short version of the story is that if you pay for cash and don't have any credit, you're going to have to put a much higher down payment on your home to be able to show the banks that you have a low risk to them, because they can't see any other way of assessing the risk to lend you the money. If there's no credit score and there's no active credit, how are they going to determine whether or not you're a credit worthy borrower? So that's my unfortunate story for today. If you have any stories of your own, feel free to drop them in the comments, or stories you've heard. But I find that stories like that, it's people like that that really have an unfortunate situation where they are ready to go in the market. And because they're not working with a mortgage broker or professional beforehand and not looking at things right away when they're starting their property and house search and house planning, that puts them in a situation where they spend all this time saving money, all this time planning, getting in touch with realtors, looking at homes, and then realizing, hey, I actually didn't have any credit and I can't buy a house after all. And I could have all been avoided if these clients of mine came to me a little sooner and we looked at things a little bit closely a lot earlier on, perhaps 2 years ago, before they started this journey of saving money. And they could have seen, hey, you know what? We have no credit. We can look at putting ourselves on the right path, looking at doing the right things to prepare our credit, not only for the minimum down payment that we can afford, but also the best rates. Because the more we work on this, the better rate you can get at the same time. And when you get a better rate, obviously a better payment, better terms. So wanted to share that story with you all. So if you are in this situation and you have no credit right now, no active credit cards, and you're paying cash for everything, and you want to buy a home in the next year or two, it's going to be really important that you have an active credit card and that you start looking at getting your credit rebuilt and established, even so you can get into the market at some point. And it doesn't take very much time out of your hands to get that all started. And there's a way we can put that on autopilot to rebuild your score. And if you're interested in that, obviously, check out my details and contact me. If you're just joining me right now, my name is Joe Bladek, the host of Canadian Mortgage Weekly. Been in the business now in mortgages for 14 years, helping clients across Ontario finance their dreams. And today we're going to get into a little bit of 2024. We're 1 month in, and we're going to see how it's shaping up. We're going to take a look at the year so far. I'm going to share with you some highlights as to what's been happening in the interest rate realm. I'll share with you some highlights with what's been happening with the Bank of Canada and the US Federal Reserve and how they have been looking at interest rates looking into 2024. And I'll share with you how that's exactly translating into real estate market sales and how the real estate market is shaping up for 2024. If you're looking at list a property or buy a property, stay tuned. You won't want to miss this information. It's very good. And if you're still around at the end of this episode, I do have a giveaway I would like to announce, and we'll get to that point in a little bit. So one of the things, well, I look at actually a few different metrics in the Canadian finance field to determine what's happening in interest rates. And one of the main things I like to look at is not only the Bank of Canada announcements, because they only happen 8 times a year, with the next announcement happening on March the 6th, 2024. But the main thing I want to get into is which way are rates trending? Which way is the market predicting that rates are trending? And one of those methods that I use is the 5-year bond yield and the CDOR metric that we can find by the Bank of Canada. So one of those things is the bond yield. And the bond yield essentially is the market pricing in what they believe interest rates will be for the next 5 years on the open market. And if we look at now the 5-year bond yield today, sitting at 3.4%. And not 3.4, 3.317%. 3.317%. So with the bond yield sitting there, interest rates have actually been trending down on the fixed rate side, and fixed rates are specifically impacted by the market, not the Bank of Canada. So when the Bank of Canada holds interest rates in January, whatever that only has to do with variable rates. Fixed rates are impacted by the bond yield. And the bond yield has actually been falling. It's been falling since a high of in the 4.5% range in 2023 to the 3.317. So about a 100 basis point decrease now since last year. Because of that, I've actually seen fixed rates come down quite considerably in Canada. And with that, I've seen buyers now that have been on the fence actually start looking at getting their finances in order to start looking at a mortgage pre-approval. I have clients coming out that have been sitting on the sidelines for 1 to 2 years and now coming to me and saying, Joe, it's time for me to make a move. I think that with the fixed rates coming down now, it's time to make the move, because that just means that the Bank of Canada is around the corner to cutting rates. What do you guys think? Do you think that's the way that the market will go? I know that the US Fed Reserve just made their announcement yesterday there on what's happening with interest rates for 2024. And Jerome Powell gave some comments there, gave some commentary on how the US is pretty much done with increasing interest rates, and that they've declared victory over using this tool as a way to bring down inflation. Right now, inflation in the US is sitting at 3.4%, and that is down from a high of 9.1%. Still high. The inflation is still high and causing a lot of grief in the US. Similarly, in Canada, we're looking at 3.4% in Canada as well. And that's down from a peak of 8.1% back in June of 2022. Obviously, that's affecting price increases. Prices are still increasing, but the good thing is that the speed of which they have been increasing on an average level has decreased. So that's wonderful news. The US Fed Reserve holding interest rates yesterday, and because of that, I did see the 5-year bond yield in Canada reflect a change of a decrease of about 20 basis points, which brought the 5-year fixed rates in Canada down again yesterday. So huge news with that. And because of that, there's a lot of buyers right now that getting into the market are getting better rates than have been available for the last 2 years. Now, let's talk about if this is going to last. Let's talk about if this is just a blink before things change all over again. But I know that the CDOR rate sitting at 5.4%. And that tells me that variable rates are still not the way to go. Fixed rates are still a little bit more competitive than the variable rate. However, also in addition to that, I have seen a lot of clients take the variable rate recently, despite us having a conversation. Hey, you know, a fixed might be the way to go right now, maybe a 1 or 2 year. Nope. They want a variable rate because clients that I'm speaking with that are currently buying homes that are taking a variable rate, they see Canada making a rate cut this year sometime. So let's talk about that. Let's talk about my predictions for rates and rate cuts this year in 2024, because obviously that is something that is on a lot of people's minds. And a lot of my clients have been asking me about that as well. I do not see a rate. Well, there wasn't a rate cut, first of all, in January of this year. And the Bank of Canada did not make any mention about rate cuts. But yesterday, Jerome Powell from the US Fed Reserve did say something about rate cuts. And he did say that they are forecasting 3 rate cuts for 2024. With Canada following suit in that, I would say that we probably could see a rate cut in Canada in the summer. When I say the summer, I'm thinking July. Maybe the July rate announcement will see a rate cut, and that could fuel the housing market for the fall of 2024. But until then, there are still lower fixed rates than variable. Right now, the prime rate is sitting at 7.2%. That's quite a high prime rate. So with prime rates sitting at 7.2%, we have fixed rates in the high 4s right now. That is quite a disconnect. You can get a fixed rate, say for 4.9, but you can get a variable rate with a prime of 7.2. And prime rate is the rate that the best credit clients get. These are the clients that are getting the best interest rates. Obviously, sometimes you get a discount to prime if your credit is very good and you have a very good financial situation, which some of my clients do, which is very awesome. And you can get prime minus 0.1, prime minus 0.5, and prime minus 0.75, and even further to that, which brings your interest rate down to the mid 6s. But still, fixed rates are winning, with the 5-year fix now sitting at just under 5% for the best interest rate. So if you're watching right now and you're thinking, wow, fixed rates are a lot lower right now. Wow, maybe I should get into the market. Don't forget, my name is Joe Bladek. I've been in the industry now for 14 years as a mortgage broker, and I help clients all over Ontario finance their dreams. I'm happy to take on another client. I am always very busy and I always get back to everybody. The worst thing is when you go to a mortgage professional and you don't hear from them and you can't get a hold of them. And I hear this all the time in the industry. I get a lot of clients come to me because they can't get in touch with the other mortgage professional. That just actually happened last week. You know, the person I went to, they stopped returning my calls. Oh, the person I went to didn't get back to me once I sent them all the information. I never heard from them again. Well, that's so unfortunate because there's a lot of different ways I can help a client. If we can't help you now, then I can help you put together a plan for the future to look at what you need to do to get things in order to buy a home. All right, so the Bank of Canada let's look at that. The next rate announcement is on March the 6th. I'm pretty excited about that one because it's going to give us some it's going to give us a introspective into what Tiff Macklin, our finance minister, is thinking for the next few months. In January, the finance minister did release a monetary policy report, which did mention that inflation is more under control now than we have had it in the past, and that we are looking at keeping rates where they are for the next little while. So March 6th, will the sentiment be that we are keeping rates where they are for the next little while, or will the sentiment be that we might see a rate cut, similar to what Jerome Powell said yesterday during the federal interest rate announcement in the United States? All right, so what's happening with the real estate market? I know I've been a mortgage broker for 14 years. With real estate, I am seeing that clients are now getting into the market where they have been sitting on the sidelines for 1 to 2 years. If you're one of those folks that have been sitting on the sidelines for 1 to 2 years, when do you think you'll get into the market? Now? And if not now, when and why? Is now not the right time? Or like, are these people wrong with what they're waiting for and what they're working on? We'll have to see. But when do you plan to get into the market if you're waiting right now? Summer? Next year? Or are you thinking that prices will crash? Well, let me tell you about prices and where real estate prices have gone since COVID. In Canada, right now, the national average home price is currently sitting at $657,145. That's average across Canada. That's including lower priced markets such as Alberta, Edmonton, and Calgary, Manitoba, we got Winnipeg, and Saskatchewan. We have Regina and Saskatoon coming in. Lower priced markets for across Canada, and all the BC markets, Ontario markets, they're really influencing it upwards. So that's the average across Canada to get an average price home. And that requires a minimum down payment of about $50,000 just to get into the market for the first time home buyer for an average price home. But what am I seeing? Right now, I'm seeing a lot of homes sell in this price range. And I'm seeing a lot of homes have a lot of offers. We just saw in Mississauga a home just under $1 million receive, I can't believe it, it was like 85 offers or something like that. And that is a crazy scene, but it's in the works. Rates on the fixed rate side only have been coming down. There has been no real change in the national average real estate home price since about August of 2023. We've seen some fluctuations, right? February 2022 brought some really high real estate prices. As a matter of fact, that's probably the high point in the market. And since then, we've seen a correction, definitely. And that correction in some markets has been 20, 30%. However, since then, prices have stabilized, even though interest rates have been going up further and stayed a high now for quite some time. We have seen the market now stabilize the prices at around $657,000. That's since August of 2023. That's pretty much half a year that prices have been at this point. So for those of you who think that prices will be going down, why? Rates are so high and prices are not coming down. Why would prices come down further if they've stayed at this level? And when I'm talking about staying at this level, I mean, we're talking about changes of plus 1 to 2%, plus or minus 2%. Very, very low changes. I mean, last month, we saw a price increase of 2%. but that comes off a price decrease of about 1%. So every month we're seeing these fluctuations. And if you think that waiting right now to get into the market, while we are on the cusp of a possible rate cut in the middle of 2024, I mean, you might be in a very it's a very low odds that prices will come down if rates go down in the middle of this year. If rates go down in the middle of this year, as the US Fed is predicting 3 rate cuts this year alone, and if Canada follows suit, because we are seeing a lot of layoffs continue. I mean, the Bank of Canada is going to have to cut rates. But with this, with prices in real estate stabilizing, and we're on the cusp of a rate cut in the middle of this year, anyone who buys right now and takes either a 1-year fixed or variable rate mortgage could come to a renewal point next year with a home that is worth that much higher, with interest rates that have come down that much more. So you may be renewing next year into a much lower interest rate. And if we look at someone that bought this year versus next year after a rate cut, you might be paying less overall money for this house if you buy this year. You may be even taking a much less of a mortgage this year versus next year. And as a result, when you get through these next 6 to 12 months worth of higher interest mortgage payments, you may be looking at a lower mortgage balance, lower down payment, and lower mortgage payment in about 6 to 12 months versus those who are buying in 6 to 12 months. So small term pain for long term gain, I would say, is possible if you're looking at getting a house at the beginning of 2024. And as a matter of fact, as I've been saying, if you're just joining me now, there's a lot of folks getting into the market right now. I came off a very, very slow December. I was quite surprised in how slow December was, into an extremely busy January with people contacting me, past clients that have been sitting on the sidelines, referrals that have been just sitting on the sidelines ready to get in. And now they're saying, let's get in. Let's look at what we can do. We want to get into the market. So with that in mind, when do you plan to get into the market if it's not now? Do you think that prices will go down, and why? I would like to hear anyone's reasoning as to why prices will go down further from this point on, with a rate cut forecasted into the late 2024 and prices have been stabilized now for 6 months. Also, just to give you an idea right now, if you are looking to get into the average price home, you're going to need a lot of income to qualify for that mortgage. You're going to need about $140,000 worth of income to qualify for a mortgage at the minimum down payment. Do you and your family now have $140,000 in income coming in every year? That's 2 income earners making $70,000, or that's an income earner making $90,000 and another one making $50,000, or one person alone making $140,000. It's an interesting scenario, but I've seen a lot of incomes increase over the last few years. There's a lot of people making a lot more money now. And the thing that could put this into a tailspin is layoffs. And layoffs is something the government is really trying to avoid right now. We have been seeing a lot of layoffs. We have been seeing unemployment rise since the middle of 2023. And with unemployment rising, we've also seen these house prices remain stable. That's very fascinating. But with unemployment rising very steadily, and now we're seeing huge layoffs across US and Canada, we may see the Bank of Canada have pressure from the public to decrease rates so that companies have more money and that Canadians have more money. So if If you're just joining me now, my name is Joe Bladdock. I'm a mortgage broker with 14 years experience financing real estate all over across Ontario. And if you have any questions, you can feel free to reach out to me. I'm never too busy for another client. And I'm just getting into here on how the mortgage and real estate market is shaping up for 2024. And if you're just joining me, I want to quickly summarize this for you. 2024 has seen mortgage rates come down on the fixed rate side and variable rates stay the same. If you have questions, definitely put them in the chat. We'd love to answer them live for you here today. We have a lot of people asking me here, when are rates coming down? Well, we're seeing the Bank of Canada make comments about how they're done with rate cuts for now. We're seeing the US Fed forecasting as of yesterday that we are having about 3 rate cuts forecasted for 2024. And I'm seeing a lot of clients jump into the market now that have not been in the market and that have been waiting on the sidelines for 1 year to 2 years. It's going to be a really interesting year. And to be honest, I'm thinking it's going to be a very busy year. It's going to be a very busy year, regardless, actually. There's a lot of mortgage renewals happening this year. There are about 2 times the amount of mortgage renewals happening in 2024 than happened in 2023. And with that many mortgage renewals, that many more mortgage renewals, we're going to see folks that bought 5 years ago that have had rates at 2 and 3%, some at 1%, some at 0.99%, come to renewal point and have rates coming in at 5%. Or as I said here recently, the 5-year fixed rate just dropping now below 5%. That's going to be quite an increase in payment for these folks. Is the Canadian government really going to want to encourage renewals happening like this, where people all of a sudden are having their mortgage payments go up 50% per month? I know I'm facing some renewals at the end of this year, and I'm planning for the worst, but expecting the best. But definitely planning for the worst, because if you're not going to plan for that, you're going to be in a very bad situation looking into the future. Because you want to be able to afford that home that you put that down payment in, and you want to be able to stay there for the long term. Obviously, buying a home is something you do for the long term. You don't rent for long term. You buy for long term. And when you're buying a home at 1% to 2% and then having those payments go up with a mortgage rate increase of, in this case, if someone goes from 2% to 4%, that's a 100% increase. That's double the rate. With a renewal coming in at double the rate, that's going to put huge financial strain on Canadians. And then that's going to put huge financial strain on anybody spending any money outside of their mortgage. And are we really looking for people just to stay at home and eat Kraft dinner all day long and not really go out, have fun, build the economy through spending? No, I don't think so. So I see some rate cuts towards the end of this year. I don't know how much. It's hard to say at the moment. But with the fixed rates dropping about 1% to 1.5% since last year, with that happening already, I could see that shifting and translating into the market thinking that variable rates could drop 1 to 1.5%. So hopefully that prime rate that's currently sitting at 7.2%, that's the prime rate, 7.2%. If rates come down 1 to 1.5%, we could see prime sitting at 6.2 or say 5.7 towards the end of this year. It's possible. I'm not going to say that's for certain, but it's possible. And if that happens, house prices will just continue to go up because incomes have gone up. Not very much, but they have gone up a little bit. And it's going to help people qualify for those homes and get into those homes. And then there's going to be so much more competition when everyone realizes, hey, you know what? Let's get into the market. So the folks that are getting in now, I think, are smart. They want to get in before the competition, and they want to get in before they they lose out and they can't afford a home again. So if you're just joining me now, I'm just finishing up my episode here. This is episode 164 with Canadian Mortgage Weekly. I'm Joe Bladek. I'm a mortgage broker with 14 years experience financing real estate across Ontario. And if you're looking for any real estate or mortgage advice, please do give me a shout. I can definitely help you with that. Never too busy for another client and can answer any of your questions. If you have a question for me after this episode is aired, feel free to find me on social media or send me an email, call, text. Never too busy for another client. And talking about my giveaway, I do want to make sure that I talk about that as well. If you're watching me on one of my platforms, I like to do, whether it's LinkedIn or Instagram, TikTok, I enjoy doing giveaways quite a bit. So one of the giveaways I like to do is for a National Nutrition gift card. And a National Nutrition, it's a great place where they sell vitamins and supplements. If you'd like to take care of your health, it's a great place to order your supplements from. They are based in Orillia, Ontario, which is where I'm based out of as well. And it's a great place where I've, bought my vitamins and supplements before. I'm not sponsored by them. It's just a personal decision to do a giveaway for that. So you can either take a National Nutrition gift card, or if you don't like that, I do have some pizza gift cards available as well. I'll be happy to share with you for $25. So if you want to participate in this giveaway, feel free to send me your mortgage maturity date, via social media or via email or text. If you have a mortgage, just all I need is the maturity date and you'll be entered into a draw. I'll do the draw next week on my episode, and we'll give away a $25 gift card to either National Nutrition or pizza, your choice. But we need your mortgage maturity date. And if you don't have a mortgage and you're renting right now and want to get in the market, then instead of your mortgage maturity date, send me your approximate date when you want to buy a home, whether it is a month from now or a year from now. Feel free to do that. In the meantime, thanks for joining me today. My name is Joe Bladek. Been financing real estate for 14 years, and feel free to give me a shout with any of your questions. But thanks for watching today, and we'll see you all next time.